Hi, today I'll be talking to you about an term, important term, which is deferred revenue and unearned income. So, what is deferred revenue? We know what is the revenue. Deferred revenue. Revenue is nothing but it is used sometimes interchangeably, although there is a technical difference between two terms, revenue and sales. Anyway, we will discuss that when we are doing this revenue recognition. So for this purpose, you consider revenue is in synonymously used with sale. So what is deferred revenue or deferred sales? So deferred revenue is nothing but the postponement of sale, postponement of revenue. And why do you want to postpone the revenue? What is the reason for postponing the revenue? The reason for postponing the revenue is the revenue does not relate to the period in which I have raised the bill. So let us say, for example, I am providing an AMC, that is annual maintenance contract, to another company, and that is valid for 6 months. Okay, the period of service is 6 months. So now I will raise a bill on January 2019. Okay, and the service period is from January 2019. This is the bill date, and the service period is from January 2019 till June 2019. That is for 6 months. So now, in the month of Jan 2019, it is my sale, and let us say this is for rupees 6 lakhs. A simple understanding, let us presume this number for simple calculation as well. So now this 6 lakh, when I'm accounting in the month of January, I cannot be accounting 6 lakhs as in revenue as a whole for the month of January alone, because this 6 lakhs as needs to be allocated or apportioned against all these other months, that is from February till June. So in the month of January 2019, the amount of revenue that I'm going to accrue or I'm going to book is only rupees 1 lakh. So now what will be the entry for this? The entry would be debit the customer. Okay, that is we are building how much? We are building 6 lakhs. Okay, so this is, I'm going to book this for the month of Jan 2019. Debit customer 6 lakhs and credit revenue or sales 1 lakh and credit deferred revenue 5 lakhs. So why is deferred revenue credited? Because deferred revenue is a liability which we are supposed to, I mean to say, we are supposed to render the services in subsequent month. That is, in this case, it is from February till June 2019. So therefore, this is not revenue for the month of June. The 5 lakhs is a postponement of the revenue, the postponed revenue for the subsequent months. So in the month of February 2019, what I'm going to do is I'm going to debit the deferred revenue. I'm going to move the deferred revenue to revenue, credit revenue. That is my sale revenue or sale. I'm going to debit 1 lakh, so 100,000. Okay. So if I open up a deferred revenue ledger, so my January balance was 5 lakhs. I'm referring to this. And in the month of February, I have debited 1 lakh, that is 100,000. So I have left me with 4 more months. So that is for the month of March, April, May, and June, 1 lakh respectively. Okay, so This will close my ledger. And every month you need to pass this journal entry. So for February, this is the entry, and March will continue. We will continue the same entry, that is deferred revenue, 1 lakh, that is 100,000. Credit revenue, 100,000. Okay, so we're going to continue this till June 2009. So with this, what happens? My deferred revenue gets exhausted as on 30th June 2019. Okay, so this is what is called as deferred revenue. So where are we going to group this deferred revenue? We are going to group this under liability side of the balance sheet. Why is it a liability? Because we are yet to provide services for the remaining months or remaining period. So therefore, deferred revenue is nothing but it is a revenue, but it is not revenue for the current period. It refers, whenever you say deferred revenue, it means to say it is the future revenue which you are yet to provide the services for. So therefore, deferred revenue is a liability. Right? Okay, so now I'm going to talk to you about unearned income. So what is unearned income? So most of the companies, they group unearned income and deferred revenue under the same category. Sometimes they use it interchangeably. So they call unearned income also as deferred revenue. That would be, I think, in my view, it is not correct, because unearned income conceptually it is different, although it is also a liability. So what is unearned income? There is an income, but which is not earned yet. How do you say it is not earned? Because you have not yet delivered the service. So now what is unearned income is nothing but it is the advance receipt. The customer is sometimes required to make the advance payment as per the terms of the purchase order, and therefore now we are supposed to account this as a liability. So let us say a customer has made a payment of, we take the same example of 6 lakhs, and this we're going to debit the bank for 6 lakhs and credit the unearned income. Unearned income is a group. We can either credit the party is grouped under unearned income. So unearned income is rupees 6 lakhs in this case. So let us say this is in the month of Jan 2019, and we are supposed to deliver them the services 50% in the month of March 2019 and another 50% in the month of April 2019. So here the entry would be, we are going to reverse this unearned income, because it is now no more unearned income but an income. Unearned income 50% is 3 lakhs. So let us say 50% here and 50% here. So, and then credit revenue, because this is the revenue for the month of March 2019. So debit unearned income. Again, the rest, the remaining 50%, credit revenue, 3 lakhs. So therefore, although this unearned income is no doubt a liability, as well as the deferred revenue is also a liability. Whereas the deferred revenue is because of the reason you're yet to deliver the service, you've already billed them, and that is also a liability, and you're going to bill it for the period as per the terms of the PO. But this is a case of advance receipt. Unearned income is a case of advance receipt, and this advance receipt needs to be accounted as unearned income in order to at least have a segregation of what is the amount of advance receipt received and what is the amount of deferred revenue. Okay, so this is what it is, and this is the difference between the unearned income and deferred revenue. So anyways, both are liability and they appear on the liability side of the balance sheet. So much better that you keep it separate. All right. Thank you so much.